Hey everyone, I just wanted to touch base on the basics of what happens in the stock market, in my opinion. So, the concept of investing hasn't changed. How it's happening somewhat changed. And it's important to separate the investment from the price action, which is more the trading part of it. So, investing is still the same way. If I do homework, I find something that nobody else or very few have found yet, I get in. When everybody else catches on, I make money. That's how you find a company when it's small, like Amazon or Tesla, and then you ride it all the way up to the moon. That hasn't changed, and what happens in between doesn't really matter if that's the goal. If I'm looking for an investment long term, that still hasn't changed. What has changed is how the price action is unfolding, and machines are in control, and they're predictable for that reason to a degree. So this is the S&P SPY ETF daily chart, nothing fancy. The rhetoric as negative as can be. They Everybody's worried about everything. Yet we're not looking at the price action in front of us, and so the price action has control stints for X period of time. Somebody's in control. Overall, the bulls are in control. That's an undeniable fact. We're looking at it. Otherwise, this chart would be going this way. So long term, bulls are in control. How about short term? The bears were in control at certain points. September of last year, a little bit later, to an extent, here, and most recently here. So we go through periods of time for one reason or another. I don't really care why. The sellers overwhelm the buyers. In my opinion, the markets are, I don't want to call them rigged, they're well organized. They have leaders. And it's only fair that it happens that way in the short term. So if somebody has a giant bucket of money and they want to influence price one way or another, they can. If somebody has a lot of influence, like the Reddit folks, which are regular people, and they collectively try to beat the giant buckets of money. That's why I kind of applaud what they're doing, but I kind of don't like how messy the process is. So how did we get here? So let me break this area down to see how twice, but I'll concentrate on one, and it happened just like it before that, to see how we got here and where we can go from here. I'll tell you my opinion. We should come back to here. So that is 398. So 3988 on the ES, which is the S&P futures. Therefore, the SPX under 3990 should make sense soon, just to build a better base. You don't want to see that go up, up, up and away, and then somebody sneezes and then we're down 10%. It should be like this: chop and go whichever direction we want to go. So let me zoom in and make sense of how we got here to see how we're going to get back to where what launched us to here. So I'm simply going to change the time frame from 1 day to 30 minutes to zoom in. Okay, so now we're looking at the same chart, 30-minute candles, 30-minute increments, and you can see that we had a big gap. I don't like to see that. That's weakness in the chart. That's not a good base for anything. So we should cover it, maybe today, maybe tomorrow, but we should come back and resist. Actually, we should go down lower to build a better base. If I look at it, 398, look, it separates everything, right? It's like a tabletop. And then boom, right above it. Why not come down at least to here, even to here, even to here? That's all fine. That's all part of price action. If I expect from here on building up and I don't want to see this, I'm not realistic. So realistic price action should come back and fill the void one way or another. And let's see, let me put down the lines that we've shared. Okay, so let me walk you through one point at a time. This was the stent where they were selling on the 1 day, on the first chart I show you, first time frame. And I said, this is what we're watching, control. Then the bears let go of the control in this bubble, and then the bulls took it back the reins. And then we hit a snag, and then I drew this saying that this could be the price action, and this could be the target, and this could be the goal. And guess what? Boom, 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 unfolded exactly the way we thought it would. And then we overshot. This was not necessary. This was overdoing things. And here we are in a tight little island over the clouds. It would make sense to come back and fill the goal that we had thought to this. And I drew this before the price action, and look how orderly it was. This was my target. This was the base of this massive rally that was extra. I did not expect that. It shouldn't have happened. Coming back to my target at least is totally normal. So the way it unfolded, the sellers lost control, gave it back to the buyers on the short term. On the long term, the buyers never lost control. Then the buyers overdid it, punch drunk, and then now here we are, dangling. If we lose this, okay to revisit this zone. I have support below it, more support below it, more support below it. So I guarantee you, if this happens, the coverage in the news will be, is this the end of the rally? Are we done with the bull market? Could Powell break this market? Could this break this market? Could that break this market? Nobody will be talking, hey, this was normal price action. We can come down to 394, 392 and still be, in fact, 390, 388 will still be in the hands of the bulls. All we did is let off some steam. In fact, blue, red is regression. So regression to the mean, overshooting a little bit, coming back to the mean, overshooting a lot of it, coming back to the mean. Normal price action, that's what's been going on. Look. So I shouldn't freak out and react to every tick and every headline. There's always a reason I can dig up to say, oh, that's why it happened. Who cares why it happened? If I expect it, who cares what triggers this drop? We expect it. So let it happen. We're ready. We can act on it. Somebody that's not ready, they see it happen, they capitulate here, which is the exactly opposite of what they should do. They should capitulate right here before it happens because they know it could come. Book profits, take some bearish positions, sell some call spreads to balance. I don't want to say buy VIX anymore because maybe not, it doesn't work. So, but if you expect it, then you're ready for it. And it's not a surprise, and emotions don't take hold and dictate action. That's it. It's very logical. It gets emotional because money is on the line. But if I act responsibly, I should be able to limit my losses by lining my time. So I was bullish. I've been sharing bullish positions. I said, on the pop, what am I doing? I'm booking whatever bullish positions I had. And if I had something bullish that was broken and got fixed, I got out even or slight loss because I can't trust it holding. So if somebody is managing without emotions, then they're less likely to be blindsided and less likely to act the wrong way at the wrong time. It's basically most everybody picks the right thing to do. What is wrong most often is timing. That's it.